I'd like us to look at a question from the class in the past paper. So this is what the question says. Kenkoff Company Limited is a coffee manufacturing company that was incorporated on 1st January 2020. The company commenced its operation on 2nd May 2020 after incurring the following expenditures: factory land and building, conveyor belt, furniture and fitting, farm labor quarters, coffee milling machine, irrigation system, borehole, construction of gabions, lorry 3.5 tons, fencing of the farmhouse, tractor, factory perimeter wall, delivery van, trailer for the tractor, computer, 2 saloon cars each costing 3,300,000, a sports pavilion. Additional information: number 1, included in the factory land and building is the cost of land at 45 million. One of the saloon car was disposed of during the year for 2,200,000. Number 3, the following assets were purchased on 1st August 2020. We have office curtain, fax machine, water pump, packaging machine. Required: investment allowance due to Kenkoff Company Limited for the year 2020. Now, when you are told to get the capital allowance for the year, there are 2 things that you're supposed to check first. The first thing you check is, how many years are you supposed to get the capital allowance? How many years? 2, which year are you getting the capital allowance? So if you look at here, in the required, all these are in the required. We are told the investment allowance due to Kenkoff Limited for the year ending that 1st December 2020. That tells you we are talking about 1 year, year 2020. And then the year is 2020. So with that one, now we can be able to go back and start claiming capital allowance. And we normally claim capital allowance through preparation of a schedule where we do the computation and then we add the total to get the total capital allowance, which now once you get it, when we'll be looking at this in our next lesson, the next topic, when we'll be determining the taxable income of the business, the total we are going to get from here is the one that will bring and deduct it here when you are determining the taxable income in the income statement. So I'll read this one so that we can have that table or schedule. This is how the capital allowance schedule look like. Then it's good you indicate the year that you are getting the capital allowance. As per the question, it is the year 2020. In this schedule, these are the items that you normally list. We have the item. We have the qualifying costs. We have the rate, and we have the capital allowance, in short written as CA, or investment allowance, written as IA. Now, to make our work easier, I want to convert our figures into shillings thousand, so that because our figures are too huge, we'll be removing the last 3 zeros. Now, once you do that, you start posting those items that qualify for capital allowance. You'll be giving it a name under the item, and then the costs that qualify for the capital allowance. You would post the rate and then you claim the capital allowance. You know, you take the qualifying cost times the rate to get the capital allowance or investment allowance. We'll start with the first one, the factory land and building. Now, factory land and building, we said factory building qualify for capital allowance at the rate of 50%. And when we are looking at the capital allowances, we said a land does not qualify for any capital allowance. Now, this being land and building, we must know how much was the value of land. If you go to the additional information number 1, that is where we have the value of the land. That included in the factory land and building is the cost of land valued at 45 million. So the land is 45 million. So that will remove it from the factory land and building so that we remain with the factory. We'll have factory building. To get the cost of land of the building, it will be 82,000. We minus the cost of land, which we were told was 45,000. So whatever remains will be how much? It will be 82,000 minus 45,000, which give us 37,000. Now, for the factory building, first year is supposed to be 50% without considering time, because up there we can see they started the operation on 2nd May. So they started using these items from 2nd May 2020. However, even if the incorporation was in January 2020, we look at the time of use if it was supposed to be apportioned based on time. But we said 50% is first year regardless of the time. When you take 50% to get the capital allowance or investment allowance, you take the amount that qualified times the rate. It gives us 18,500. You post it there. From there we go to the next item, conveyor belt. The cost that qualify is 6,200, 6,200,000, although we had converted to shillings thousand. We had said conveyor belt, the rate is 50%. It's under manufacturing, a machine that assists for manufacturing to continue. When you take that 50% of 6,200,000, you get 3,100,000. The next one is furniture and fitting. For the furnitures and fitting, the amount is 350. For the furnitures and fitting, we said the rate is 10%, and at the rate of 10%. And then we said, other than the 50%, all the other rates are per annum, per year. Per annum, we said, is per 12 months. So if it was used for less than 12 months, you have to apportion the rates accordingly. So this one is supposed to be per annum. So you multiply by, if you look at the number of months it was used, they started using it from May 2nd. Now, when a month is considered, we consider that to be a full month. So from May, so when you count them to the end of the year, that is the end, that 1st December 2020, those are going to be 8 months. So you multiply by 8/12. Then the amount is going to be 350 times 10% times 8 divided by 12, which is going to be 23.333. We round off to 3 decimal places. Now, moving forward, I'd like us to list the items, then we do the computation. So we go to the next one, farm labor quotas. Now, farm labor quotas is a structure that is used in farming, and it says structures is something that either permanent or semi-permanent in the farm. They qualify for capital allowance at the rate of 50% and 25% under farming. So this farm labor. So don't say that we say the labor quotas is supposed to be 10%. When it is in farming or mining, it's supposed to be 50%, then 25%. So this being the first year, 50%. Farm labor quotas, which we have 48,800. The rate being the first year 50% without considering time. Coffee milling machine, that is now a machine used in manufacturing. So it's a mixture of farming and manufacturing. So this for manufacturing, which we said is 50%. The next one is irrigation system. Irrigation system, we said, is in farming and is supposed to be 50% being the first year. The other one is borehole. Borehole, we said, is 50%. The other one is construction of gabions. Now, gabions look like it's a structure in farming, but gabion, we don't claim capital allowance. When we get to the next topic of taxation of business income, that you are going to see, it's not considered to be a fixed asset. It isn't. So we don't give it capital allowance. Lorry, we say that's supposed to be 25%. 25, and this being that it was not used the whole of the year. We said any other rate other than 50% is per annum, so we apportion based on time. Up there it was used from May, so times 8/12. And move to the other one. We continue. This is the qualifying costs, the rate, and the capital allowance or investment allowance. We had reached on lorry. From there we go to the fencing of the farm. Fencing of the farm, fence is a structure that is used in farming, so that should be 50%. Remember, these are in shillings thousand. The rate is 50% without considering time. After that, farmhouse. Farmhouse, we said, is 50% under farming, but it is a sole proprietorship or a partnership. We only take a third of the cost. But now, this one is a company, Kenkov Company Limited. Whenever you see limited, that's a company. So this one, we won't take a third, the whole cost. The other one is tractor. Tractor, we said 25%. But consider time. Since it was used from May, it will be 8/12. Factory perimeter wall. Wall, we said 50%. Which we have 948. Supposed to be 50% without considering time. Delivery van, we say 25%. times 8 over 12. Trailer for the tractor. Trailer we said is 10%. Times 8 over 12. Computer, that we said is supposed to be 25%. The next one is 2 saloon cars, each costing 3,300,000. Saloon car we said is 25%, but we noted saloon car and sport utility vehicle, if the value is more than 3 million for each vehicle, we restrict to 3 million only. This one is 3,300,000, so we have to restrict each to 3. Now being 2, 3 times 2 give you 6. Two, 6, and you can write even an R on top to just show that that's a restricted value, not its value, not its true value. 25% for 8 months, so 8 times over 12. Then sports pavilion. Sports pavilion we said is supposed to be 10% per annum. After that we go to the additional information. Additional information number 1, we had talked about it because we are told included in the factory landed building is the cost of land valued at 45. We remove that from the value of the factory so that we can remain with the value of the factory. Number 2, one of the saloon car was disposed of during the year for 2,200,000. Now at the moment we don't consider the disposal. We can only consider if you were told when it was disposed. Like if you were told that it was disposed in November. Remember saloon cars here we had assumed they were used for 8 months. That's why we multiply by 8 over 12. But if we are told it was sold in November, that means that it was not used for 2 months, November and December. We could have said, okay, we had said from May to December, that's 8, minus the 2 that were not used. So that could have been 6 months. So it's supposed to be 25 times 6 over 12. But now since here it's not indicated when it was disposed, then we can ignore that part. Otherwise, if we are told, then we could have computed based on the time it was used in that year. After that, we go to number 3. The following assets were purchased on 1st August 2020. So we have office curtain. Office curtain fall under the rate of 10%. The ones that we said are 10%. And then this one we consider for how many months. It was from 1st August. If you count the number of months, those are supposed to be 5. August 1st, so August is included. So August, September, October, November, December, those are 5 months. 5 over 12. Fax machine, we said 10%. It's under 10%, again for 5 months. The next one is water pump. For the water pump, we said it's supposed to be 50% first year, and so the first year without considering time. Then the other one is packaging machine. For the packaging machine, that is supposed to be 50%. Now, being the last one, now we do the computation to get the total capital allowance, but to now compute for each first. We had stopped here. So 50% of 4,800, that will be 2,400. 50% of 4,2, that will be 2,100. 50% of 1,480, that will be 740. 50% of 2360 1180. 25 times 8 over 12 of 1120. It will be 186 667. We round off to 3 decimal points. Sorry, this will be point. The next one, 780 times 50% give us 390. 50% of 2620, that will be 1310. The other one is 50% of that 600 times 25 times 25 times 8 divided by 12, 600. The other one is 948 times 50%, 474. 2600 times 25% times 8 divided by 12, 433.333. 520 times 10 times 8 divided by 12, 667. 720 times 25% times 8 divided by 12, it gives you 120. Then 6 times 25 times 8 divided by 12, 1000. Then the next one is 1840 times 10% times 8 over 12, 122.667. Then 320 times 10 times 5 divided by 12, 13.333. The other one is 180 times 10 times 5 over 12, 7.5. The other one is 560. This will be 280 times 50. The next one is 1720 times 50%, 860. With that one, we can now get the total capital allowance. Where now we are going to add all these total. The first one is 18,500 plus 3,100 plus 23.333 plus 2,400 plus 2,100 plus 740 plus 1180 plus 186.667. Then we add 390. we add 1310, we add 600, we add 474, then we add 433.333 plus 34.667 plus 120 plus 1000 plus 122.667 plus 13.333 plus 7.5 plus 280 plus 860 gives you 33,875.5. That become the total capital allowance to be claimed by this business in the year 2020, and we have answered the question. I would want us to look at another question so that we can have a comprehensive overview of these capital allowances. So here is the question. Toland Mining Company started prospecting for titanium in Mombasa in the year 2017. Expenditures relating to research, testing, and winning access to titanium amounted to 240 million. The company paid 720 million to the government to acquire rights over titanium, and shillings 210 million for the purchase of land. The following assets were constructed or purchased during the year 2018. 1. 2 graders were purchased at a total cost of 16 million. A forklift was acquired at a cost of 6 million. A store was constructed at a cost of 36 million. Office furniture was acquired at a cost of 2,400,000. Labor quarters were constructed at a cost of 42 million. 10 lorries 5 tons each were acquired at a cost of 30 million. Specialized processing machine for mining were acquired at a cost of 960 million. Staff clinic was constructed at a cost of 12 million. Computers were purchased at a cost of 480. Ships 600 tons was acquired at a cost of 450 million. 3 saloon cars for official use were acquired at a total cost of 9 million. So we are required to have capital allowances due to Poland Mining Company Limited for 2 years ended that 1st December 2018 and 2019. So as we say, the first thing that you normally consider is which year are you supposed to, first of all, how many years are you supposed to get the capital allowance? Here we have 2 years because the question is about capital allowance for 2018 and 2019. Then which years? The years are 2018 and 2019. Although, as you are told at the top there, they started prospecting in the year 2017, but actually nothing really happened in 2017. They didn't even claim capital allowance. So here we'll be considering the first year to be 2018. So we start with 2018 and then we go to 2019. So we start with the first year. For the year 2018, we have item, qualifying costs, rate, capital allowance or investment allowance. So we will start looking for those items that we should be claiming capital allowance, and I want us to convert them again to shillings 1,000. So we start with at the top there, the prospecting of titanium started in 2017, but as we have said, 2017 nothing happened. So the first year to be claimed capital allowance should be 2018. So expenditure relating to research, testing, and winning access to titanium 240. We said under mining, that is supposed to be 50% for the first year, then 25% from the second year. So because we are in the first year, 50, So research, testing, and mineral access costs. Which we have 240,000. Remember, it's 240 million, but because we have converted to shillings thousand to 40,000. And then the rate, we said first year for this one is 50%, undermining 50%. The other one, the company paid 720 million to the government to acquire rights over titanium. We say the cost of acquiring rights is supposed to be 50%, undermining. So government rights costs, which we have 720, 50%. We'll do the computation later. After that, and 210 million for the purchase of land. But we say land doesn't qualify for any capital allowance, so we ignore that one. We continue. The foreign assets were constructed or purchased during the year 2018. See, so all of them were 2018, so first year. So 2 graders. Now grader, we said is supposed to be under the 10%, not 50. It's not undermining 50, it's under 25%. And the value is 16 million. Now the rate is 25%, and since we are not told when it was specifically acquired, so we assume a full year, so we want a portion based on time. Forklift, we said is supposed to be 25%. No apportioning of time because you are not told. The store, we said buildings relating to mining, those are supposed to be 50% under mining. Office furniture, that's supposed to be under 10%. Labor quarters, that's supposed to be undermining buildings, which we said is supposed to be 50. The other one is 10 lorries each, 5 tons each, were acquired at a total cost of that. That's the total cost. That's supposed to be 25. Specialized processing machines for mining were acquired at a cost of 960. Mining machine we said is 50. Then we have staff clinic constructed at a cost of 12. That's again, under mining is supposed to be 50% under mining. Then we have the computers. Computers we had said is 25%. The other one is a ship. 600 tons was acquired at a cost of 450. So ship we had said is under 50%. The next one is 3 saloon cars for official use were acquired at a cost of 9 million. Now saloon car 25%, but be careful, if each is more than 3 million, you only give 3. But if 9 for 3, divide by 3, that will be 3 million each. So we won't restrict. Three, 9 million. Under 25%. From there, we do the computation of the amounts. So 50% of 240,000, that will be 120,000. 50% of 720, that will be 360,000. 25% of 16, that will be 4. 25% of 6, that will be 1,500. 50% of 36, that will be 18,000. 10% of 2,400, that will be 240. 50% of 42,000, that will be 21,000. 25% of 30, that will be 7,500. 50% of 960, that will be 480,000. 50% of 12, that's supposed to be 6,000. 25% of 480, that will be 120. 50% of 450, that will be 225,000. 25% of 9,000, that will be 2,250. And with that, we now get the total capital allowance. For the year 2018. We add them. 120,000. We add 360,000. We add 4,000. We add 1,500. We add 18,000. We add 240. We add 21,000. We add 75. We add 480,000. We add 6,000. We add 120. We add 225,000. We add 2,250, and that gives us 1,245,610. That is the capital allowance that was supposed to be claimed in the year 2018. And because the question was asking for capital allowance for 2018 and 2019, now we go to the following year, which is supposed to be 2019 now. So remember, we claim each year separately when we are preparing the income statement for each year. So again, we'll have the item, qualifying costs, the rate, and the capital allowance or investment allowance. These are in shillings thousand. Shillings thousand. Okay, so for 2019, you realize that nothing new was acquired or done. So whatever we had in the previous year are the one that we moved with in 2019. So here we are only talking about the second year. So we just be transferring these items and now looking at if the rate changes. The first one is research, testing, and mineral access costs. The amount now, remember from the second year we said is supposed to be 25% per annum straight line on the remaining balance after first year. So the costs before first year was 240. First year we claimed 120. So what remained was 120. So 240 minus 120 is 120. That is the qualifying cost in the second year. The rate is 25%. So this one times this one, that is going to be 30,000. Now, were we to claim for the third year, remember it will be the same. Remember from second year, it remains cost and straight line. So what you claim in the second year is the same as the third year, the fourth year, that way. Because the qualifying cost will still remain after the first year, 120, the rate is 25, the same. So therefore, it remains the same. We continue, government rights. Rights costs, which we have 720 minus 360, that remains 360. 25%, that will be 90,000. Then graders. Now, other than the 50, the other rates are straight line per year the same. So for the 25, that the qualifying cost remains the 16,000. The rate is still 25. Straight line, remember, 4,000. For the next one, forklift, it will be 6. The same amount. The rate is 25, the same. The amount here is 1,500. Then store. For the store is supposed to be the remaining balance. 36 minus 18 give you 18. The rate is 25, so that will be 4,500. Then office furniture. For the office furniture, we'll have the same. This one do not have issue. 10%, 240. For the labor quarters, now the balance 42,000 minus 21. So labor quotas, which is supposed to be 21,000, then 25%, that will be 5250. Then we have the next one is lorries, which we have now, that is straight line, 30,000, 25%, 7,500. After that, mining machine. For the mining machine, the remaining balance, which will be 480,000. The rate is 25%. That will be 120,000. After mining machine, staff clinic. Now that the remaining balance, 12 minus 6 gives us 6. The rate is 25%, giving us 1,500. Then computers. Computers is a straight line, so for 80, 25%, and that gives us 120. Then ship. Now this on the remaining balance after first year. The remaining balance, this minus this, give us 225,000. and then 25%, that will be 56,250. Then the saloon car, the last one, so saloon cars, there are 3. Now this is straight line, so it remain 9, then 25%, that give us 2250. With nothing more, we can now add them to get the total. So we start with 30,000, just a minute. So we start with 30,000, we add 90,000, we add 4,000, we add 1,500, we add 4,500, we add 240, we add 5,250, we add 7,500, we add 120,000, we add 1,500, we add 120, we add 56,250, we add 2250. That gives us 323, 110. That is now total capital allowances. Now that is how we do the computation of the capital allowance under the topic of capital allowance. For today we are going to stop there, but you are going to download the assignment under the video and then kindly attempt those assignments. Thank you very much. Here is your teacher, Patrick Kamau Kamure. Thank you.